We begin with breaking news from Washington, where Donald Trump has delivered a major salvo in his trade war, this time aimed squarely at Canada.
Should now be hit all goods coming from Canada with an additional 35% tariff. And this is one of the many that Donald Trump, according to these letters he's sending around to different countries.
Canada's desperate attempt to break free from U.S. economic dominance took a major step on June 30th, 2025, when it launched its first overseas shipment of liquefied natural gas. However, this move comes as Canadian leaders scramble to find alternatives after Trump's trade policies have systematically dismantled their comfortable reliance on American markets. For more than 30 years, Canada had grown complacent, funneling virtually all its natural gas exports through pipelines to the United States. In 2024 alone, $8 billion worth of gas flowed south daily, a dependency that left Canada vulnerable when Trump began implementing his America First energy policies. As Washington tightened the screws with increasingly effective tariffs, Canada's energy sector found itself trapped and desperately seeking escape routes. The LNG Canada terminal in Kitimat, British Columbia, represents Canada's costly and risky gamble to survive Trump's economic pressure. Built at an eye-watering cost of 40 billion Canadian, and money that could have been spent on domestic priorities, this facility compresses and chills natural gas for overseas transport. The project only became urgent after it became clear that Trump's policies were systematically choking off Canada's traditional energy exports. While Canada touts its direct access to Pacific shipping lanes, the reality is far more sobering. The country is now forced to ship gas 10-20 days across dangerous ocean routes to reach Asian markets, competing against established suppliers who are already entrenched in these regions. The inaugural shipment of 66 million tons represents a drop in the bucket compared to what Canada used to export effortlessly to the United States. The economic devastation is already apparent. Canadian gas previously enjoyed premium pricing in U.S. markets, but now faces the brutal reality of global commodity pricing. Trump's March 2025 decision to impose a 25% duty on most Canadian imports, plus a 10% tariff on energy products, effectively shut Canada out of its most profitable market. Canadian producers are now forced to sell at significantly lower prices to Asian buyers who have numerous other options. The much-vaunted Asian demand isn't the salvation Canada hoped for. Japan, South Korea, and China already have established suppliers and aren't particularly eager to pay premium prices for Canadian gas when Qatar, Australia, and U.S. exporters offer better terms and proven track records. Canada is arriving late to a saturated market, forced to compete on price alone. The LNG project's construction phase, while generating some temporary jobs, has also revealed Canada's fundamental competitiveness problem. Harsh weather, remote location, and excessive environmental regulations drove costs far higher than comparable U.S. projects. The provincial government was forced to offer extensive tax incentives just to make the project viable, essentially subsidizing private companies while Canadian taxpayers foot the bill. The facility's capacity of 14 million tons annually sounds impressive until compared to global competitors. Qatar's operations dwarf Canada's output, while U.S. Gulf Coast terminals offer flexibility and reliability that Canada simply cannot match. By 2026, Canada hopes to conduct 170 voyages annually, but this pales in comparison to the thousands of shipments from established exporters. Canada's plan to double capacity to 28 million tons faces enormous hurdles. The project requires tens of billions more in investment at a time when global energy markets are increasingly volatile and investors are wary of remote, high-cost projects. Environmental regulations continue to pile on additional costs, making Canadian LNG some of the most expensive in the world to produce. Asian buyers aren't as enthusiastic as Canadian officials pretend. While they appreciate having another supplier option, they're primarily interested in the lowest cost, most reliable sources. Canada's high production costs, extreme weather challenges, and untested supply chains make it a risky proposition. Many Asian companies are signing contracts with Canada only as backup options while maintaining primary relationships with more established suppliers. The environmental advantages Canada claims are undermined by the massive carbon footprint of shipping gas across the Pacific Ocean. While the Kitimat facility may run on hydroelectric power, the emissions from transcontinental shipping often negate these benefits. Meanwhile, competitors like US exporters can reach Asian markets through more efficient routes and establish shipping networks. Canada's Indigenous partnership model, while politically necessary, adds layers of complexity and cost that competitors don't face. The Haisla Nation's equity participation, though commendable from a social perspective, creates additional stakeholders who must approve major decisions and share in profits, reducing overall project returns and slowing decision-making processes. The harsh reality is that Canada is entering the global LNG market from a position of weakness. Trump's successful trade policies have forced Canada into expensive alternatives, while established competitors maintain their advantages in cost, location, and market relationships. Qatar's massive Northfield expansion will flood the market with cheap gas, while US Gulf Coast terminals continue to offer superior flexibility and reliability. Canada's Montney Basin reserves, while substantial, require expensive extraction and processing technologies. The remote location and harsh climate make operations costly year-round, while competitors in warmer climates with easier access to shipping routes maintain significant cost advantages. The timing couldn't be worse for Canada. Just as the country desperately needs LNG revenues to offset losses from Trump's tariffs, global LNG markets are becoming increasingly competitive. New suppliers are coming online worldwide, and buyers have more options than ever. Canada's high-cost production model struggles to compete in this environment. Phase 2 expansion plans look increasingly unrealistic as market conditions deteriorate for high-cost producers. The additional $20–30 billion investment required seems unlikely given current global energy market trends and Canada's deteriorating competitiveness. International investors are increasingly skeptical of remote, expensive projects when alternatives exist in more favorable locations. Canada's attempt to position itself as a geopolitically neutral supplier rings hollow when the country is clearly scrambling to escape the consequences of Trump's successful trade policies. Asian buyers understand that Canada's LNG push is driven by desperation rather than strategic advantage, giving them significant leverage in negotiations. The departure of that first cargo on June 30th, 2025 represents more than just a shipment. It symbolizes Canada's forced retreat from its comfortable dependence on American markets. Rather than a strategic repositioning, it's an expensive, risky gamble born from necessity after Trump's policies systematically dismantled Canada's economic assumptions. The path ahead looks increasingly difficult for Canada. International energy markets are becoming more competitive, just as Canada enters with high costs and unproven reliability. Trump's continued success in reshaping North American trade has left Canada scrambling for alternatives that are expensive, risky, and far from guaranteed to succeed. If current trends continue, Canada's LNG gambit may prove to be an expensive lesson in the consequences of taking American markets for granted. While other exporters strengthen their positions and reduce costs, Canada faces the prospect of becoming a marginal, high-cost supplier in an increasingly crowded global marketplace.